Good morning, everyone. Welcome to Midwest Market Solutions Insider Commentaries on Thursday, April the 13th. Last commentary this week as markets will be closed on Good Friday in observance of the holiday. So there'll be no trade tonight or tomorrow. Trade resumes Sunday night, and then we will have trade again normal next week, resuming Sunday night into Monday. Overnight is higher, led by soybeans up about 9 cents. Now, yesterday we flirted with resistance, could not close above it. We are solidly above it this morning. Corn is testing yesterday's highs into resistance. Wheat's kind of being drug along. The big fundamental news, I think, is planting delays and the weather forecast. Now, common sense would tell you if we have planting delays, corn should be the upside leader, as wet conditions in the spring may force acres out of corn and into soybeans, or even if you delay plant your corn, the pollination period will be pushed back just a little bit into the heat of the summer. That could affect yield, but it's the soybeans that are rallying in here. And no surprise, if you've been following our Commitment to Traders Report analysis, we've been anticipating a rally in the soybean market as the upside leader here. It's just a matter of a timing of when. And it appears that we are trying to start doing that on some short covering. I think we've ran out of all sellers after the supply and demand report. That was a day that we dropped hard on bearish news and then rallied back to close virtually unchanged, and now we're having 2 days of short covering. So it doesn't mean we're just going to continue to march higher, but some short covering is warranted. We're at the highest price levels in the month of April overnight, and fundamentally, it's hard to explain a rally other than just short covering. Now, export sales, nothing exciting here. 19.4 million bushels of soybeans, corn at 31, and wheat at 20.1. We are looking at livestock trade this morning here, probably be a little higher in the cattle. The fundamentals, I think, still look a little sloppy in this market. The most positive are the declining cattle weights. The cutout values were mixed once again after a 1 or 2 day bounce. We saw cutouts mixed yesterday in the close. That's not necessarily bullish for this market. And the lack of cash trade last week and on the Fed exchange yesterday suggests that maybe packers are not willing to pay up for this market as what the trade had hoped. So we are looking at, I think, kind of a mixed tone to this cattle market here today. We had some profit taken off the highs after that disappointment in the cash market, but 126 trade was reported in Texas. Not a lot of head, but that would be steady with the previous week. And you notice the April board has really narrowed up the spread between the cash and the futures. That's exactly the reason why we don't want futures or hedgers to be in the futures market, is because right now the cash is steady to slightly softer, but the futures are rallying, and you're losing on both ends of this equation. There's just very little profit opportunity to hedge in the futures market when you're this discounted to the cash market. So if you want to get some hedge protection in, puts are the way to go. Put call spreads maybe are not a bad way either, but straight hedges are kind of a dangerous proposition at this point, I think. Have a great day, and good luck on your trades. This has been Brian Hoops from Midwest Markets. We'll talk to you soon.